Good morning, students. Myself, Dr. Lakshmipathy MG, working as Associate Professor, Government First Grade College, Koratagere. My title is Financial Accounting, and the last session is 8th. In 8th, I am discussing about the theoretical framework of accounting, the Institute of Chartered Accountants of India. What we discuss meaning, need, and objectives of INDAS, and finally we list of various INDAS. So first we know the some meaning or introduction about the ICAI. The Institute of Chartered Accountants of India is a premier professional accounting body in India. So established on 1st July 1949 under the Chartered Accountants Acts 1949. So enacted by the Parliament for promotion, development and regulation of the profession of chartered accountancy in India. So it functions under the administrative control of the Ministry of Corporate Affairs, Government of India. So in India, accounting standards and auditing standards are recommended by the NFRA, that is National Financial Reporting Authority, to the Government of India, which sets the standards on auditing to be followed in the audit of financial statements in India. So members of the institute are known as ICAI Chartered Accountants or ICAI Accountants, either fellow or associate. However, the word chartered does not refers to or flow from Royal Charter. So ICAI Chartered Accountants are subject to a published code of ethics and professional standards. Only a member of ICAI can be appointed as a statutory auditor of a company under the Companies Act 2013. The Institute of Chartered Accountants in India was established under the Chartered Accountants Act 1949, passed by the Parliament in India with the objective of regulating the accountancy profession in India. ICAI is the second largest professional accounting body in the world in terms of number of membership and number of students after the AICPA. It prescribes the qualification for a chartered accountant, conducts the requisites examination and grants certificate of practice. What are the key highlights? What is the purpose? It regulates the profession of chartered accountancy in India, where headquarters is situated, New Delhi, India. What is the global standing? ICAI is the second largest accounting body in the world in terms of memberships. Who are the members? Chartered accountants. who are qualified to work in various fields like auditing, taxation, financial reporting, consultancy, etc. So, what are the main functions to be performed by ICAI? It conducts examination for CA course. It prescribes qualification and training for members. It regulates and maintains ethical standards among CAs. Advises government bodies on accounting and finance matter. So ICAI is also known as for its rigorous standards, contributing significantly to the financial discipline and transparency in India's economic environment. Next, INDAS are Indian Accounting Standards. INDAS are set of accounting principles and guidelines notified by the Ministry of Corporate Affairs to bring transparency, consistency, comparability in the financial statements of Indian companies. So, Indian accounting standards are converged with international financial reporting standards. Next, what is the meaning of INDAS? INDAS refers to Indian accounting standards, which are accounting standards adopted by India and modeled after IFRS. These standards are mandatory for certain classes of companies and aim to ensure that financial statements reflect a true and fair view of the company's financial position. What is the need for INDAS? The first one is global comparability. To align Indian companies with global accounting practices for easier comparison. Second need is investors' confidence. It provides clarity and reliability to investors, especially foreign investors. Transparency encourages full disclosure and more accurate reporting. Cross-border transactions facilitate smoother mergers, acquisition and joint ventures with global companies. Improved governance. It strengthens corporate governance through better financial disclosure. Global comparability to make Indian companies' financial statements comparable with global entities. So, the other need of Indian accounting standards I mentioned one by one. So, INDAS facilitates cross-border money flow also. INDAS facilitates global listing. INDAS also facilitates global comparability of financial statements. INDAS improves the investor's ability to compare investments globally. Global investment becomes easier and capital market stakeholders benefit. Next, what are the objectives of INDAS? The first one is to ensure financial statements present a true and fair view of the company's financial performance. To ensure the credibility and reliability of financial reporting. To bring uniformity and comparability across different companies and even industries. To align Indian accounting practices with global standards. To provide relevant and timely information to stakeholders like investors, regulators, and lenders for decision making. And it ensures standardization to harmonize accounting practices with globally accepted standards. True and fair financial reporting. To present accurate, complete, and unbiased financial information. Enhance accountability. To improve responsibility and transparency in financial statements. Facilitates comparison. To enable easy comparison of financial results across companies and countries. Aid in decision making. To provide relevant and reliable financial information for stakeholders like investors, regulators, and management. And lastly, we discuss about the various list of Indian accounting standards. So what is the first one? IND AS 1. Presentation of financial statements. IND AS 2. Inventories. Indian AS 7. Statement of cash flows. IND AS 8. Accounting policies, changes in accounting estimates and errors. IND AS 10. Events after the reporting periods. IND AS 12. Income tax. IND AS 16. Property, plant and equipment. IND AS 19. Employee benefits are covering. IND AS 20. Covering accounting for government grants and disclosures of government assistance. IND AS 21 explains the effect of changes in foreign exchange rates. IND AS 23 discuss about the borrowing cost. IND AS 24 explains related party disclosures. IND AS 27 highlights separate financial statements. IND AS 28 highlights investment in associate and joint ventures. IND AS 29 highlights financial reporting in hyperinflationary economies. IND AS 32 describes financial instruments presentations. IND AS 33 explains earning per share. IND AS 34 explains interim financial reporting. So IND AS 36 explains impairment of assets. So IND AS 37 explains provisions, contingent liability and even contingent assets. So IND AS 38 explains intangible assets. IND AS 40 explains investment property. So IND AS 41 agriculture. IND AS 101 first time adoption of Indian accounting standard. So IND AS 102 describe share based payments. IND-AS 103 explain business combinations. So IND-AS 104 insurance contracts. IND-AS 105 explain non-current assets held for sale and discontinued operations. IND-AS 106 exploration for and evaluation of mineral resources. IND-AS 107 explain financial instruments disclosures. So IND-AS 108 explain operating segments. So IND-AS 109 explain financial instruments. So IND-AS 110 explain consolidated financial statements. IND-AS 111 explain joint arrangements. IND-AS 112 explain disclosure of interest in other entities. IND-AS 113 explain fair value measurement. So IND-AS 114 regulatory deferral accounts. IND-AS 115 explain revenue from contracts with customers. And IND-AS 116 explain leases. So conclusion that the Institute of Chartered Accountants of India plays a crucial role in regulating the accounting profession and ensuring high standards of financial reporting in India. The need for ICAI arises from its responsibility to maintain integrity, transparency, and uniformity in accounting practices, which is vital for the confidence of stakeholders and the smooth functioning of the economy. So, dear students, these are the references books available for your updating more knowledge. So, and finally, I am telling what type of questions are expecting from this chapter. Three types of questions are asking: section A, section B, and section C. In section A, 2 marks each question. What type of questions they are asking? Give the meaning of accounting, define accounting, state any 2 objectives of accounting, what is capital, what do you mean by drawings, what is the branches of accounting, who is debtor, who is creditor, what is depreciation. These are the simple type of questions are asking for section A. And remaining section is B. 5 marks questions are asking. So explain the objectives of accounting, explain the scope of accounting, explain the users of accounting information, explain the process of accounting, explain the branches of accounting, explain the accounting conventions and concepts, explain the objectives of accounting standard, explain the objectives of accounting standard board, explain the functions of accounting standard board, and mention objectives of IFRS and state any 10 Indian accounting standard. And finally, section C questions: explain the concepts of accounting, explain the scope and objectives of accounting, and explain the functions of accounting. Thank you very much.